Now, family members, I want to go over multiple positions that we need to monitor as we see now what others see eventually, because these particular positions will be getting us P.A.I.D as time goes on. So we need to be looking at possible inclusion of these positions in our portfolio. So now please take copious notes. Now, which 5 positions have juicy growth prospects ahead of them? Well, I'm about to give them to you so you don't have to look any further. All 5 positions I'm about to give you, okay, are primed for significant expansion in the coming months. Now, stocks are already recovering from the recent market pullback, and they're pulling back again today. And these particular positions, in particular, boast big catalysts that will push their prices even higher. And you don't have to just take my word for it. Each of these particular positions have serious backing from Wall Street's top analysts. Now, family members, these are the analysts that the market tends to trust for their precise stock picking ability. So without further ado, let's dive in. First position I want to give you is Amazon, symbol AMZN. Now, Amazon is at an eyebrow-raising about $1,500 a share and does not immediately strike you as a cheap stock to consumers. It's going to be called Shipping with Amazon, and it's going to start in Los Angeles and roll out more broadly within the year. And with just 1% of the market, Amazon could create a new $5 billion revenue stream. And meanwhile, Amazon content strategy is also blossoming. The company has just poached NBC Entertainment president Jennifer Psaki for Amazon Studios. And maybe you haven't heard of Twitch, but Amazon's live streaming video platform is now apparently bigger than CNN. Twitch aggregate viewership continues to rise, and that display ads on properties like Twitch continue significantly to other revenue. Okay? And when Amazon quotes its numbers under the category of other revenue, well, other revenue soared 58% to $4.65 billion in 2017. So overall, Amazon has a very bullish outlook. Out of 36 analysts, in the last 3 months, 34 are bullish on Amazon stock, with just 2 left on the sidelines. And the analysts have an average price target on Amazon of $1,664. Amazon, symbol AMZN. Next position I want to give you is T-Mobile, symbol TMUS. Now, T-Mobile is the 3rd largest wireless carrier in the United States. The company is easily outpacing competitors, capturing most of the industry growth since 2013. This is the down to one. This is down to 1, a greatly improved network, and 2, targeted marketing for underserved urban and rural areas. That's how they have captured this mammoth growth since 2013. In 2017, for example, TMUS opened 1,500 T-Mobile branded stores and 1,300 Metro PCS branded stores. Now, the market sees no signs of growth slowdown for TMUS. On the contrary, T-Mobile revenues margin expansion, coupled with ongoing subscriber momentum, supports continued growth projections for T-Mobile. TMUS is expanding geographically and is aiming to aggressively deploy its 600 megahertz spectrum for increased coverage capacity. Now, this aggressive expansion should mean significant cash flows generated for TMUS and a corresponding rise in share price. As a result, this 5-star company, okay, is garnering analyst expectations of a $75 price target on the stock, which means that's a 25% upside potential. Now, the average analyst price target that I just gave you indicates big upside potential for TMUS. Next company I want to give you is Caesars Entertainment. Caesars Entertainment, symbol CZR. Now, this global gaming giant is back. After emerging from bankruptcy in 2017, the company has effectively restructured and reorganized. Now the company, talking about that Caesars Entertainment, symbol CZR, the company is focusing on critical task increasing revenue growth. The company said in a statement, our future appears bright with a much improved balance sheet, approximately $2 billion in cash, and strong free cash flow, end quote. Now, this particular company has an analyst expectation with regards to price target of $15, which puts it at a 14.5% upside potential. And this particular company, talking about CZR, Caesars Entertainment, the shares held by hedge funds now totals over $8.4 billion. Now, in the last 3 months, only 2 analysts have published ratings on CZR, and both are buy ratings. Caesars Entertainment to get your P.A.I.D. Next up, Unitedhealth, symbol UNH. Now, one of the largest insurance companies is Unitedhealth Group, symbol UNH. And this makes a very compelling investment proposition right now for you, me, we, the ASK THE WIZ Wealth Institute family. Now, listen to me closely. Unitedhealth in Latin America markets is in Latin American markets due to the Banmédica acquisition in Brazil. Now, this $2.8 billion deal closed on January the 31st of this year. Now, this opportunity from the international business arena should represent a new avenue of growth that could help drive impressive long-term returns for Unitedhealth. Now, UNH has 100% support from Wall Street. In the last 3 months, the company has received 11 buy ratings from analysts. So no pesky hold or sell ratings here. No, the $267 average analyst price target suggests just over 16% upside potential from the current share price. Family members, Unitedhealth, symbol UNH. And the next position I want to give you is one we talked about a little bit earlier. Alphabet, a.k.a. Google, symbol GOOGL. So now, last but not least, I want to present to you Alphabet, the umbrella company for Google and YouTube. Now, if you think that GOOGL has already peaked, think again. Okay? There are several exciting catalysts ahead as the company moves more aggressively in key markets. A key catalyst lies in Amazon's monster cloud business, okay? And Google is going after it. It's going to be called Google Cloud. Now, for the first time, Google CEO has just disclosed that Google Cloud makes about $1 billion quarterly, and it hasn't been rolled out fully. That's a massive $4 billion for Google, a.k.a. Alphabet Inc., or GOOGL, in annual revenue. However, this is still well behind Amazon's cloud unit and Microsoft's cloud unit Azure. As a result, analysts think that there's big growth potential here for GOOGL to catch up. Okay? Google will probably have a $20 billion cloud business in 5 years. And from an Amazon perspective, probably $150 billion of its market cap is probably the cloud services that Amazon provides. Okay? So, at the end of the day, GOOGL boasts a strong buy recommendation from the number one analyst on Wall Street. And in the last 3 months, analysts have published 24 buy ratings on the stock versus just 3 hold ratings. And on average, these analysts see Google spiking 16% to reach $1,308. Family members, you're talking about positions that will get us P.A.I.D, right? NOW. We're talking about multiple stocks that have huge growth capabilities.